Hey everyone, welcome back to Chasing Returns. My name is JJ.
And I'm Zach.
And this is episode 8. Today we're actually going to be jumping into a challenge that our friend group did. We did change the names of our other friends that are in this little, I don't even want to challenge that we did just to keep their privacy. But it's going to be an interesting thing to dissect. So Zach, do you want to pull that up? I might need to share.
Yeah, so basically what we did is a draft in late December, and we each picked 6 stocks. We drafted them, snake draft, and the goal was just to throw them into a challenge and see who does best over the course of the year. There was no shorting allowed. There was no buying indexes allowed. It was just pure buying stocks for 1 year. So let me know when you can see.
Yep, it's up.
Okay. So as you can see, JJ's right here in the pink. I'm in the blue. I have the draft order down here and then performance by round. So I guess we'll go through the draft first. Friend number 1 picked Unity Software first overall, which I think is actually the worst performer in the entire.
It's rallied this week.
Okay.
It's rallied still, like the last 4 days. It's been up, I think.
So our number 1 overall pick, we basically had an Anthony Bennett here.
Hey now, don't need to rip on my school too.
Yeah. So friend number 1 is in last place as of now. JJ is currently in second to last, I believe.
I like playing from behind.
Playing from behind. I think I'm in third to last. Yep.
Yeah.
And then friend number 3, and we did a random. So basically what I did for that one is I took the S&P 500 and then I did a random generator. I picked 5 numbers and it was like alphabetically arranged and we picked those. And for the longest time, random was winning because they had FANG in here, which is Diamondback Energy. As we know, oil companies have been the big winners this year. So random was winning for the longest time. And then friend number 2 here took the lead recently. But yeah, so looking back at your portfolio, what do you wish you had done differently maybe in the draft?
I've got a couple thoughts on this. I think we're going to have one similar thought, like looking at like, oh, how did we miss this? But the one thing I did want to just bring up real quick with the random is obviously we did that based off of the classic study of, a monkey throwing darts at a board and being able to beat, professional stock traders. As that's something that's always been randomly done. A YouTuber that I know quite literally did this experiment with a real monkey, and it did beat the S&P for the year. And he did it again this year. I don't think it's going to happen this year, but year's not over. But I just wanted to bring that up real quick for people, another reason of why we did that. But to your question now, yeah. So here's the thing. Amazon, my first overall pick, 100% would stick with. I don't care that it's down 30%. That's still the stock I would have picked first. The one I do regret, and I'm looking, and actually I don't even think it was picked. The one that I can't believe I didn't add, and I even made this joke when we were doing the draft. No one did big tech. No one chose big tech. Now, I think you chose Google, correct? Yes. You chose Google, but outside of that, everyone stayed away.
You mean like Apple, Microsoft, Tesla?
Part of me, I really wish I chose Microsoft because Microsoft is an extremely safe company. Now, it might come down in valuation, but out of big tech, that is an extremely safe company in my mind in terms of lots off of subscriptions. Now, it was trading very rich, and obviously you've seen that come down a lot. But in general of like, some of my more speculative plays or even a Meta, like probably would have been safer than Meta. The problem is just, Meta, I would not have chosen second overall, if that makes sense. I think I might have still picked it. However, I don't know if I would have picked it second round. So, just things really change. But I probably would have chose Microsoft with my second pick, which is still down. So, would have improved probably by like 20, 30% only, because I think it's probably down 20 to 30% this year versus 50 with Meta. If that's correct. I don't have it in front of me. It might be down a little less.
What, Microsoft?
Yeah, do you know?
Probably down like 25. I'm not actually, I don't know.
I think it's well, because I
Maybe less. Yeah.
well, because I think it was in the 300s, and I think now it's like low twos. Oops, I clicked something. Um, so anyways, yeah, it's probably like 25 to 30%. But anyways, that's half of what Meta is. Disney, I still would have picked. When I don't know. Because I'll tell you, living in Vegas, Strip's still busy. Even with the economy currently, I think people are still going to want to come here in the summer. You're still seeing flights come in, even though flights are going up crazy in value or like price. I mean, so if I had to repick two, it probably would be Facebook and Win. But even then, my really only regret is Meta, Facebook, to be honest, because it's one of those. I'm like, it just, yeah, if there was a company that was safer, it would not have been that, because I think there's still a lot of risk with it. I still believe in the company. I know a lot of people are pulling out of it. I still see tons of growth. I mean, a lot of that's obviously going to rely on some of the gambles they're taking. But between Amazon, Disney, I mean, those I still view as super safe stocks, especially ones that could rally at the end of this year. Disney, just with their IP alone, and also with the restrictions going away, I thought summer, everyone's going to start visiting Disneyland, Disney World again. Disney Plus is doing extremely well. Obi-Wan Kenobi just ended. So that's a big thing that I was thinking of. But yeah, I mean, the bottom two are essentially Vegas stocks, which I'm from Vegas currently. Planet 13 is a marijuana stock. I mean, it's not going to get legally federalized this year probably, but it was a gamble. And also it had been hit really hard. So I'm like, okay, how much lower can it really go? It got hit a lot harder. But it's one of those things of like, that's one of my largest holdings personally still. But if I were to choose something for only a 12-month period, probably wouldn't have chose Planet 13, I guess. So if I had to repick, I mean, it's going to be easy based off of what's not picked, but I probably would have gone Amazon, Microsoft, Apple, Disney. I don't know what my fifth would be though. Oh, I know what it would be, because this is what I want to get into. I think this is our prediction for the same, and then you can chime in on this because I've been doing majority of the talking on this. Although obviously we'll be getting to your picks next. I would have done an oil stock.
Yeah.
I don't know
it's easy to say in retrospect.
Exactly, but my point is there was so much writing on the wall though for this year of with oil like that, and the biggest thing I was told, and it's like, no duh. Okay, oil was negative for how long? The companies are going to make that back at some point. Plus, you're going to have summer with travel back, and prices always go up in the summer. The only thing we didn't see was the war in Ukraine. So that obviously
that's what really
sent it out. But I more mean oil as viewing as like that should have been a very safe play. Like we should have viewed that as oil was negative. They're going to have to raise prices to make that up on the back end. You're going into summer travel. You have less restrictions. More people are going to get out. They're going to want to go on those trips that they haven't. So I would have done an oil stock. Like I said, I might not have chosen, I mean, they're all probably up, but like, I'm not saying I would have chose the best one, but just viewing at the economy as a whole going forward of where there was opportunity, what would have been stable, and something that was losing so much money that then had the potential to make so much money kind of guaranteed as it's a necessity, probably would have done an oil stock. So I would have gone big tech and then oil, which I mean is such a safe, easy thing to say. But I mean, at the table when we drafted these, I was saying it's like, oh, I should just go all big tech, which is basically an index fund considering how much they make up. But did you have that same thought too? Now, obviously with oil, obviously in retrospect, of course you want it, but looking back at it, do you think like, how did you miss like the writing on the wall for it?
No, it's not an area I know well, so I don't think I would have. I never even really considered it. It's interesting because this is a 1-year challenge and we're already about halfway through. It's a lot harder to pick a stock for 1 year than it is to pick for long term. We'll keep this tracker going probably after the year just to see what happens. But
I really, and like I said, this is gonna be way out. I really want to see this in 5 years.
Yeah, I'll leave it. I don't know why I picked Alphabet first round. I don't even know the company that well. I don't own it personally. So yeah, Baba, I thought I definitely want, I should have just taken Baba first round because like for a 1 year challenge, it had been beat down so much. It was so cheap on so many metrics. It was like if only a few things happened in the news, like not much had to go right for the stock to double. And I still think it could double by year end, depending on how, um, like depending on what happens. But we'll see. Rick, probably not going to discuss Rick today. You viewers, you can look up what they do, but I won't discuss it right now.
Well, you could just say, why did you pick it? You could say,
Why did I pick it?
there's a quick.
I think it's a great company that's undervalued. I think they have a great CEO.
And you think it's a great company mostly because it's undervalued and well run.
Well, yeah.
No, I know.
No. I think that the business itself is very good too.
I just wanted you to say that part specifically.
I think it's a great business from a financial perspective, but
there we go.
Yeah. Citigroup I went with. I mean, at the time it was trading well below tangible book. I wanted to get a cheap financial in there because I thought we'd enter a period of rising rates, which we are. But the issue is the yield curve is flattening. So bank stocks have actually been hurt by that.
Yeah, which is crazy.
Yeah, because the front end of the yield curve is rising and the back end is going down. But anyway, and then Citigroup, actually Berkshire bought some in Q1. So that was a nice confidence boost. I don't own it in real life. And then Paytm is another, it's a Indian fintech company. This was just a total flyer, and it's gotten crushed this year. I didn't even look at the valuation or anything. I was like, might as well throw this in here. This could be a big winner or loser. I don't know. Yeah. I wish I had I was looking very closely at some of the Japanese trading house companies.
Interesting.
Because they were looking really cheap. I was like, because I wanted more international. And instead of those, I went with Paytm here.
I thought that too. I was thinking international markets for a bit as well. Obviously, I had Baba on my list. You got that before I was able to pick it. I don't remember which way the snake draft went for beating me to that, but that definitely was one on my list. You also your first two picks were on my list. The main ones I wanted were like one I regret, but I really wanted Facebook, Amazon, and Google because those are the tech stocks that had already been beaten down. Microsoft and Apple had held up really well prior up to when we drafted. So I was trying to stay away from those, but like I said, they're such safe companies.
Yeah. So I guess if you had to predict now, who do you think is going to win?
Well, actually, before you say that, the other thing too is, which I totally forgot about, and I own this stock and I don't know why. I think it's because it had gone down so much prior to our draft, but now obviously with the way the market is, it's shot up. Visa. Visa would have been like, the problem is I was not viewing the recession happening as fast as it did. I was thinking there was still some optimism in the market, which is also why I threw in my growth stock with my fifth pick. Plus on top of that too, I wanted something that would be fun, something that could, 10x. Right. So it's like, because maybe President Biden does legally federalize it. Never know. So that was my gamble stock. But yeah, Visa's one. Actually, I probably would have if I saw what was going. That's one that I own and I do like, and is just a great company in general, which both of us have praised. But looking at this, unless we flip into where growth stocks are big again, friend one is not winning. Teladoc is a great company. I own Teladoc, a lot of Teladoc, but it's just been crushed this year. Unity, I think, is a great company too, but it's just not the year for those types of stocks. In all honesty, anything you have to say on that? It looks like you're scrolling over.
I just think, I think friend one actually had a pretty good strategy of picking, since it's just a 1 year challenge, picking like high volatility things. Yeah, makes sense, even if they're overvalued. Like in retrospect, a lot of these were probably extremely overvalued.
Yeah,
but to pick high volatility stocks in a short term challenge like this makes sense.
So, not only that too, the reason why I bring those two up specifically is you hear Teladoc and Unity all the time, and Unity was really directly linked with the metaverse, which was trending around the time, like a month, 2 months prior. That was when a lot of the hype around that still was, which is also what hurt him too with Unity, is once that came down. Like a company I own with Matterport, which I do not own for the metaverse. It just so happened that they got tied to the metaverse I like them more for the real estate side of things and then the future of that technology and where metaverse could be the use case, but I think there's a lot of others that could use as well. But that stock, oh my God, has been crushed. It's down to like $5. And that thing was, I don't think it got to 40, but it was at least 25. But also Visa's up, I think 5% this year too. So that would have
What's
been
up?
yeah. I think I did year to date. Let me look at this. Maybe it's just in the past 12 months. Oh, never mind. That was today. It was up 5%. What is it year to date? I typed in year to date. Anyways, I'll look that up again. Sorry. I did that quickly while you were talking. I was trying to pull up some facts. Friend two, to be honest, I can't talk about. I don't know.
Well, he actually, a note is he also picked 5 random. His strategy was what you said at the beginning. He's like, I don't think we can outperform random. So he just picked random as well. So we basically have 2 random.
Yeah. And that's what I like. I remember, I think we mentioned him doing. It's just one of those things of I don't know what any of those.
He doesn't know either. The only one I know is Moody's.
What is that?
It's like a ratings agency. So they rate like debt. Like they're the ones who give out a AAA, triple B ratings or whatever.
Gotcha.
Yeah.
But yeah, friend 3, I like a lot. Obviously, both of us would have gotten Berkshire. At least I would have. I'm pretty sure you would have as well.
It wasn't on my list.
Oh,
going into the
interesting.
year.
For me, it definitely was just because how safe it was. Like I wanted to try to get 3 safe stocks and then 2 volatile stocks. Because like I said, I didn't want to go all volatile because you could go way down, even though I still am. But like I said, I just didn't project Meta, Facebook to be down that much. That was, like I said, the error in my thinking. But I really like friend 3s. Sam was on my list for a high volatile stock that had been really beaten, or not high volatile, but a stock that had been really beaten down that really can't go down anymore, as it's a very popular company with, I mean, something for like essentially entertainment or stuff people enjoy, we'll just say, in the beverage industry. And then Burke's the right company. Walmart, fantastic company. Obviously, I own both those. I do not own Burke A. I wish I did. Although I could do fractional shares. So
right.
But what's PayX? Do you remember?
I don't know it's Paychex, I think is the name of the company. I don't know.
And then Melly. I've heard of Melly.
That's Mercado Libre. It's it's a e-commerce company in Latin America.
Gotcha.
Yeah.
I was gonna say I've heard of it. I don't necessarily know. I wasn't sure if I knew what it was. And then obviously our rando. Yeah, I mean having Fang in there was such a cheat code and got extremely lucky. And of course it did because it's a random.
But I mean, random, they were winning by a lot for most of the year.
Crushing it.
And recently, well, Fang has come down a bit. And then I guess some of their other stuff's got destroyed too. But honestly, I mean, I don't want to toot my own horn, but I think I'm back in it. I was down, like, I didn't think I had a chance for the longest time because of PayTM at a point was down like 70%. But I still think, like I said, it would not surprise me if Bob is 200 end of year, or it could be 80 end of year. And then I think, yeah, we'll see.
But, yeah, so I'm just fact checking these real quick because I want to give actual numbers since I've talked about it today. So Microsoft is down 20% year to date.
Okay.
And Visa is down, I think 7.3 year to date.
I didn't realize Visa held up so well. Wow.
Yeah, and like I said, I mean it was 5% today, so obviously got a little boost. Mm-hmm. But I mean, yeah. Yeah. What was the order that we drafted again?
Here's the order. So we started over here and then snaked
friend 3, see Walmart was, I forgot I had the second pick. No, I still would have gone with Amazon.
Look how much better round 2 is done.
I was going to bring that up when you initially did that. Wasn't round 5 winning at one point?
Well, now it's way in last.
Oh yeah, I know, but I'm just saying. I feel like I remember.
Yeah, I thought it was. I think because Freeport was way up. But yeah, round 2 is being held up by Baba and Berkshire.
Understandably. Oh, my worst stock is in that. That's crazy. So if Meta wasn't in there.
Yeah, so let's see. Okay, top 3 best performers are Fang, ATO. I forget what that is, and then
Burke.
Baba.
Burke.
No, Baba's beating Burke.
No, but Burke beats Fang.
No, Burke's down 7.5.
Oh, Fang's up. Sorry, my
Yeah.
mistake.
We only have two that are up.
Yeah,
Fang and
my mistake.
ATO.
You're right. You're right. You're right.
And then
Yeah.
Baba's flat. And then the
My
worst three are Unity,
Meta has to be there.
Teladoc,
Melly. Oh, no.
and Planet.
Oh my gosh, I'm not even looking there. Yeah. And then it would go what? Meta, Melly.
Paytm. Paytm would be fourth. Yeah.
It would have been funny if we did a no, we can't do that though. I was gonna say it would have been funny if we did something like a college golf score or like team golf where you go play 5-4 count.
Oh yeah.
So where you get one that goes out. So
One mulligan.
essentially, I mean, it's more of just, but the problem is that that works so when you play every day, because then it can rotate. This is 1 year, so that doesn't make sense to do.
Well, we could have done just your top four at the end of the year stay.
Yeah, no, but I mean, you might as well do 5.
Yeah.
So that's part of building up. Because you want to, some of us, like I said, I tried to somewhat diversify in terms of my strategy of, like I said, tech, Disney with strong IP, and subscription based, and then more kind of high risk. One was travel and one was my super high risk. I tried doing it, it didn't work. That's so far at least, but I don't know, man. It's definitely been fun though. I definitely think this is something we should do every year just for fun.
I think our agreement was the winner, everyone else has to buy, like cover their meal. We'll go out to dinner. But if random wins, we have to pay for a random table.
That's right. I forgot about that. Yeah, that is exactly right.
So hopefully random doesn't win.
And we're going to a 5-star restaurant regardless.
Yep. Steakhouse. Yeah, in Vegas.
Oh man. All right. So going over this, and obviously we're showing that we're not great at picking stocks. Granted,
on a 1-year basis.
And on a 1-year basis.
And also we don't own, like I don't own 3 of mine.
True.
Yeah.
But I mean, we did pick this though for a 1 year. So like essentially it's our own little fun. Now, some of us tried to win in 1 year, so that does change things.
Yeah.
But not only was this 1 year, but it's also been one of the worst markets we've seen in our lifetime. I guess actually, no, I guess, yeah, one of the worst, because technically we weren't old enough to really probably be investing in 08, but some of us kind of got started in 2020 and had a little bit before then. You've been investing a long time.
Oh, well, this is way worse. Because 2020
by a mile. And that one, that one recovered in like 20 days.
Yeah.
Or started to at least. But anyways, knowing all of the hard times that have happened throughout our lifetime, obviously the last two are the main ones that have affected us. We haven't seen what happens to real estate, because I mean, that's kind of the next point of our lives. But I wanted to transition in to, what are you doing to maybe get ahead in the sense of people, people our age, or like, what could people our age, what are you doing? What are you doing to prep yourself for basically adulthood? Not retirement's a long way away, but it's stuff that obviously we're thinking about, because the more you save while you're younger and invest and try to work to get ahead, the easier, your life hopefully will be later on. And obviously this has been extremely hard times. Millennials have had it even worse than us. Who knows how we're going to have it now with the economy the next couple of years. Obviously everyone's dealing with it, but our age groups now more entering the workforce for the first time. So just kind of what do you think is the most important for people our age to be doing? And kind of what's your main focus for, like I said, trying to get ahead for yourself in your future?
I think it's just, it's good to just live below your means, save money, and then learn how to manage your portfolio, or you can take 2 routes. You can either just go 100% indexing, or you can really study investing and hope that you can maybe outperform index funds. But that's extremely hard to do, because I feel like it involves an enormous amount of work and knowledge. It's not just like, if I study a little bit, then I can outperform. You really, really have to. So I think the best thing for most people, and probably the best thing for myself, but I refuse to do it, is to just, save money, index, do it in tax advantaged accounts, and you'll be fine.
Yeah, I mean, I completely agree. Obviously, we're both big fans of Warren Buffett, which hopefully anyone watching this is, and if you're not, you should be, or at least should take a lot of the lessons that he has bestowed upon investors. I mean, he's even mentioned, obviously, as kind of about index funds, is that yeah, most people can't. I mean, almost no one can beat an index fund. Obviously, he's been able to do it, but top people, stock traders can't do it. So it's like, why are you going to try? Not saying you shouldn't. Obviously, it's fun, and while you're young, you know you should take a little more risk. But I'll tell you one thing for me, is at first I was in index funds. I bought Nintendo and I bought index funds. That was like my first purchase, my big lump sum of money like 5 years ago. That was the first thing I did. And Nintendo did extremely well for me at like 3x. It's down like to maybe 2x, 2.5x since I bought it. Because I bought it pretty much at the low, which is why I bought it, because I knew, I'm like, oh, this is way too strong of an IP. Like if they stop making video game consoles, they'll do even better by just selling their IP with their theme parks they're building now and all that. Because I think
They're building theme parks.
Universal. Yeah, in Japan it's fully open, and I think they're opening one in California as well. So yeah,
it's awesome.
but yeah, and I probably will go to it. I'll drag someone.
Oh, I'll go.
100% I'll be going. But in the index funds. But anyways, but then I kind of transitioned away. Obviously, I kind of got, I'm like, oh, individual stock picking, a few companies. Luckily, also I did a lot of lump sum in 2020 when everything dropped. So I got very great timing there. Honestly, I've had kind of pretty good timing in the market for me of when I like have wanted to get in, of just kind of seeing that and knowing to take advantage, which is hopefully what today is. And maybe it's not going to recover like 2020 because that was just irregular. But now it's like, yeah, prices are down. So if you find good quality companies, it's like they'll probably be up in 5 to 10 years. But I'm finding myself honestly going probably like 60, 70% index funds right now, because it's just like it's the safest spot to be. It's going to be a guaranteed return as long as the US continues, innovating and succeeding, which I believe it will. It's like index funds right now are one of the best options. Like I was staying away from them the last couple of years just because everything was so overpriced, and even with big tech, which is what holds it up. And I'm just like, oh, my return's going to be so little there. I might as well try to find something that's beaten down or something that's a growth play. And obviously those had been doing great. And obviously growth plays in a recession, first thing to go. So it's like now I'm seeing the back end of that, and I'm dollar cost averaging in to the plays I believe. 2 might go to 0. We've talked about that. But the other kind of 3 that I have a very good belief in, one being that's my number 5 pick on that stock chart with Planet 13. It's like those are ones that I'm now lowering my cost basis on, and I'm going to ride out. And like I said, hopefully those, do extremely well for me. But yeah, I just think most people, it's like index funds. It's the easiest thing. It's like you just dollar cost average into it every month, every 2 weeks. Anytime you get a paycheck, just throw some in and forget about it. And it's like, you're going to be set off great. And as you mentioned it too, tax benefit accounts. It's like, if you have a 401k, if you're an employee, the biggest thing with 401k that I like, I have some beliefs around that, but we're not going to talk about that today. But like, if you have a 401k where your employee matches what you put in, that is one of the best returns in your investment. Like anything you get doubled for free, essentially, it's like that alone is worth throwing as much into it as possible. But yeah, it's just and then also against you tackle it. It's like I think we're both page to page, which is also why I think, like I said, we get along so well talking about this stuff. Is living below your means. It's one of those things of like, obviously it's good to enjoy life, but I'm not one that really likes going out. I don't drink. Like there's a lot of things. I waste money on a lot of things, but also a lot of things I buy, I view as investments. Just like these 2 over here, these putters. We can talk about that another time, but very expensive. But it's one of those things of those are notorious for holding value. So I get to enjoy it. I get to use them. And if I ever needed to resell them, I could. So that's the things I try to buy. Because I am a collector. It's probably one flaw, but at the same time, it's enjoyable for me. And it's one of those things that if I ever needed to sell the stuff, it still has value. So I don't buy things that lose value. I think that's a big thing for me, which like I said, some people don't quite understand, but I think, as you see things or you understand the prices, you do. But yeah, it's one of those things, just save money, index funds, live below your means. Like I said, you summarized it a lot faster, but like, that's really what it comes down to.
Well, I've changed my tune a little bit on that because
Okay, let's hear it.
money eventually is meant to be spent. Like
Yes.
when you die, it's not like they put
Correct.
your net worth. It's not like a score. It's not like you're trying to be the high score. It's like eventually it is meant to be spent. And do you really want to, like, there are some people who they're just going to not enjoy their 20s. They're going to try to save as much as they
Correct.
possibly can. And it's like, well, do you really want to defer happiness or whatever, travel, things like that until old age? Or like there, you have to have a balance. And that's something I've realized recently. And that's why I've done a lot of traveling recently. And I'm like, because I mean, it's better to travel when you're young than when you're older and can't do as many things, I
I
think.
completely agree. And I actually have come around a lot on this too. However, I have one thing to switch on this. So for me is the trips and the travel and the experiences I do, I try to make cheap. So like more road trips versus flights, or like close trips, like trip to the mountains, that's a 3 hour drive. Trip to LA or California, that's a 5 hour, 6 hour drive. Obviously, gas prices are high right now. So obviously that's one issue. But just in general, like I'm trying to definitely explore and do more things and enjoy. But it's one of those things of I like making sure that I'm taking care of the investments and the savings before I do that. I'm a big fan of, and obviously you have to be making enough to do this. But if you're smart about it, in all honesty, you can kind of do it. If you don't have kids, that's the big thing. If you don't have kids, if you have kids young, that's you got to be prioritizing them, and hopefully both the parents are working, or hopefully one of you has good jobs and the other one's able to take care of, because it's time consuming. But if you don't have kids, it's one of those things of it's like you don't really have to be making a crazy amount to be able to save a good amount and enjoy life. And do some, like I said, do some trips.
It's about balance. Yeah.
Exactly. Yeah. And I think there's a good balance to it, because it's like my big thing is when I say that, it's like you don't need to, for your entire 20s, you do not need to suffer through. It's like you can do the quick trips and whatnot, but it's like if you just do 3 years, even it's like that's going to set you up so much for a down payment on a house, because maybe that's your first big thing. So you can get equity into a house. Obviously, you can pull that back, and that's a great investment. Hopefully, obviously, like I said, some people are buying houses now, it's going down, but hopefully over time everything recovers.
Mm-hmm.
But it's just one of those things of like you can get into a house and then you're not renting. And that's if you're in the same place. Like that's so beneficial. And then it's one of those things of like your later 20s. Hopefully you have a fiance, a spouse. You can then enjoy travel with them, or even if you're not, you can enjoy it yourself, and it's cheaper. So I don't think, like I said, my big thing with saving and living below your means isn't forever, but it's one of those things of definitely when you're young and you have the means to, definitely try to do it. Like I said, don't deprive yourself of stuff you enjoy. Definitely do not need, because you need to be happy. But it's one of those things that you don't need to splurge in your early 20s. You splurge hopefully in your early 30s. And that's my whole thing is I'm setting myself up for my 30s. I'll
You just
definitely
have to decide what's worth. There are times when it's worth dishing out money.
No, that's what I'm
times
saying.
when
I'm
it's
not saying I'm not going to enjoy my 20s. I'm
Yeah.
saying though, my goal is to definitely enjoy my 30s more splurging wise than in my 20s. Because I think the things I enjoy don't cost a lot of money. That's my thing.
Well, that's the key. If you can find things you enjoy
Correct.
that don't
But
cost money.
But
That's
even
the
then,
key.
it's
Yeah.
like I said, it's like you can do a trip and then splurge on one thing and it saves you on everything else. I don't know. There's ways around it. But my big thing is it's like I'm definitely trying to enjoy life, definitely trying to do new experiences, do things with friends, hopefully with girlfriends, eventually a spouse. But yeah, like I said, just don't be stupid with your money, because it's like that you only live once. I completely agree with that. And you want to enjoy stuff while you're young, but you can't be depriving yourself of your future. It's like, as you said, it's all about balance.
Yeah, you don't want to be working. Like obviously you want to retire at some point. Well, some people don't want to.
Well, here's the thing. And we are running out of time. We got like 2 minutes left. So this will be my closing remark on that. I've learned this. I don't think people always want to fully retire. Like obviously people don't want to be working. I think the key is you want the option to not have to work. Because I've noticed a lot of people will retire like 40 and they get really bored and they end up back in the workplace, or they run out of money. So it's one of those things of I would like, and what I mean by that is they continue living their lifestyles if they're making the same amount of money. So that's partially on them. But my big thing is it's like I want to be able to save enough and have, my family set up and everything like that to where I can choose to work to still maintain a really nice lifestyle, hopefully, but I don't have to be doing it. So it doesn't feel like, oh my God, I need to be doing this to make ends meet, to do this, like to something I don't want to do. So I think that's really the goal, is the fact that you want to find a job at some point that you get to do that maybe you don't like love in terms of like, oh my God, I'd rather not be working, but it gives you some purpose and it gives you a nice paycheck and you would hopefully enjoy what you're doing. But it's like you're choosing to do it. You don't have to do it. I think that's the key when you get older.
Yeah.
60 seconds, 60 seconds left. Anything else you want to close on?
I got nothing to add really.
Well, perfect. I think this is a good discussion. I'm sure we'll kind of go off of something on this before. This is a little something we wanted to shake it up instead of going away from news. I think I want to do some more challenges like this. Just something fun to come up with, maybe between you and I. And I definitely want to start getting more on the advice part. This is our first part. We kind of just spitballed, didn't have a lot like thought through. So we kind of rambled on, but yeah, it's definitely something I hope everyone enjoys and we hope to continue doing. Thank you everyone for watching and we'll see you next week.